Hello everyone, my name is Tyson Romanick and I'm a Senior Portfolio Manager here at Baker Boyer National Bank. In today's video, I'm going to be talking about two important concepts when it comes to investing. The first is rebalancing and the second is diversification. Now, broadly speaking, in our portfolios, we recently did a rebalance. We trimmed our stock and we added to bonds in a time where bond yields have been rising and they're at a higher rate than we've seen in over a decade. For years, we've been overweight stock as interest rates on bonds have continued to fall, therefore decreasing their future expected returns. But in 2022, we saw a big rise in rates, making bonds a lot more attractive. Instead of getting 1% on corporate bonds, you can get about 5% now. And so what we did is we went from an overweight in stocks back to neutral in our portfolios. And in doing this, we also increased the quality of our bonds. We did this because we wanted to improve the resiliency of our portfolios in these times of uncertainty and volatility. Now, it's also really important to remain diversified. Even though this means you're always investing in something that's not doing the best, it also means that you have another thing that's doing really well. And for the last few years, US stocks have been outperforming international stocks, but lately we are starting to see that dynamic shift. If you look on the chart, you can see that over the last 3 months, US stocks have given us a respectable 5.5% return. But if you look at international developed stocks represented by the MSCI EAFE, they've returned 21%. And if you look at emerging markets, they've done even better, returning 23%. Now, even if you look back 6 months, the same holds true. And this just shows why it's important to remain diversified, because you never know when those shifts are going to happen and you don't want to miss out on them. Now, there are three main reasons why international stocks have outperformed and still look attractive today. The first is valuations. International stocks are really inexpensive right now. They're about 35% cheaper on a PE ratio than US stocks. The second reason is dividends. You get almost twice the dividend payout sitting in international stocks as you do the US counterpart. And the third is currencies. In 2022, we saw the US dollar hit a 20-year high. Now, going forward, as the US dollar mean reverts, kind of falls to its long-term average, this will be a tailwind for international stocks as well. So with that, I'd like to thank you all for joining me here. If you have any questions about anything we've discussed, please reach out to your Baker Boyer representative.